Welcome to AR Accounting. Today we are going to see a question of manufacturing account, making manufacturing account. That how this question is given in the exam, and how to solve this question, how to make manufacturing account, and what about its marking scheme, that from where we get maximum marks and where we the students lose their marks. Okay, so be with me till the end of this video so that you can get all the ins and outs of the manufacturing account. Let's start. Grace owns a factory which makes shoes. She buys handbags from a supplier and sells the shoes and handbags. Okay, the factory is about making the shoes, and further, she buys handbags from supplier and sells them. Grace prepares her financial statements to 31st March each year. At 31st March 2025, her ledger accounts showed these balances. Okay, now we see what are these balances. First of all, this is the heading, that inventory at 1st April 2024. Now in manufacturing account there is not a single inventory. Okay, the inventories can be of more than one types in manufacturing account. It can be the inventory of raw material, it can be inventory of work in progress, and it can also be the inventory of finished goods. As you have seen in the sole trader and previous simple questions of making income statement, we saw there was only single figure of inventory, but now we can see there is a whole block of inventories, and we have these three types of inventories. Raw materials, you know, raw materials. Work in progress mean all the material that is inside the plants, that is neither raw material nor finished goods. And then finished goods, shoes only. Okay, 27,540. So this block is about the opening balances of inventories. Then purchases of raw materials. We further bought these raw materials during the year, and carriage inward of raw material, this is a part of cost on of raw material. Okay, carriage inward of raw materials means the money we spent for the delivery of raw materials to our place. Then there is next heading, that is wages. Okay, and if we see the wages, we are given three types of wages: factory operatives, factory supervisors, and office staff. These three types of wages are given. Now factory operatives are direct wages. Direct wages means which are directly associated with the making of the products. Okay, factory supervisor wages are indirect wages. It will go in factory overheads because this is indirect wage. And office staff is is not supposed to go in office staff wages is not supposed to go in manufacturing account, because office staff is not related with the manufacturing. Office staff's expenses of anything of office, any expense of offices is not shown in manufacturing account. Okay, these are shown in income statement. All expenses related to offices are shown in income statement. This is very important while making manufacturing account. Then we are given the value of rent and insurance, combined expense of rents and insurance, factory power, expense of the power running for the factory, factory equipment at cost 180,000, and factory equipment provision for depreciation or the accumulated depreciation. Okay, this is total depreciation till date, that our asset has reduced the value of 64,800 till this date. Okay, this is the cost. 180,000 means that for how much we have bought this factory equipment. Okay, now we are given with some additional information. Let's see what's that. This is the closing balance of, first of all, inventories. These are closing inventories of our stocks. Closing. Okay, now how closing? Because of this date, 31st March 2025 is the closing date of our financial year. So that's why on this date we have raw materials of $7,100, work in progress 14,390, and finished goods 27,985. Okay, then we have some other information. Rent and material is to be apportioned 65 to the factory and 35 to the office. Means this factory expense will go into manufacturing account. Okay, manufacturing account, and this 35 percent part of this expense will be shown in income statement. In income statement, remember the next adjustment is at 31st March 2025. Grace owed $1,315 for factory power. Owed owed mean this expense is owed, mean this is accrued, means this is payable, but this expense has incurred. We have done this expense but we have not paid. That's why this expense is accrued. This is and accrueds all added. Accrueds are added into our expense amounts that we have paid. And 2000 for the factory supervisor wages, this is also accrued. Okay, this is also accrued wages. Accrued wages of factory supervisors. So next is factory equipment is depreciated. Equipment is depreciated at 20% per annum using the reducing balance method. This is the depreciation policy about the factory equipment, that how we depreciate this asset, which method we will use, and what is the rate of depreciation. Okay, now we see its solution and the working of those solutions one by one, that how we have to start this manufacturing account, what are different blocks there, how to make that manufacturing account, and how these adjustments will be included in that manufacturing account. Okay, they are starting with a heading, cost of material consumed. I highlight the headings here. Cost of material consumed. Okay, we can also say it, this is direct material or direct materials. Direct materials are those which can be easily associated or calculated, that how much of some material is being used for 1 unit of the product. Okay, these are the direct materials. Now we can see the opening inventory of raw material that was given there in the start, and then purchases of raw material are to be added. Okay, we will add purchases of raw materials. Opening inventory means when the year started we had this much inventory, 5345 of raw materials, and during the year we bought more raw materials, that will be definitely added. And then carriage inward of raw materials will also be added, because all these things increase the cost of raw materials. Okay, now you can see these these three items are added. Number 1, number 2, number 3 means opening inventory plus purchases and plus carriage inward, these are added and we get this answer. And 79,435 is the cost of raw material consumed, and that we have during the year. And now we have to subtract the closing inventory of raw material. This is given in the additional information. This will be subtracted. Closing inventory of raw material of 7100 will be subtracted. For subtraction you will place brackets around the figures. Okay, this is mean it is being subtracted. I also showed here with the minus sign. Okay, students, you can see that now from this value of 79,435, how this came by adding all these three. Then we will subtract 7100. Closing inventory is subtracted, you know, as we have learned in making a simple income statement. Okay, then we got 72,335. This is the cost of raw material consumed. This figure is actually the cost of raw material consumed. It is 72,335. And up to here, writing all these things, understand for the marking scheme. Okay, we will do this calculation and you will get only 1 mark if you correctly calculate this value of 72,335. Then the next part is direct wages, direct labor. Okay, this is the next part of our manufacturing account. After direct materials, what we have to write? Direct wages. And for the direct wages, we have written 29,175. How this 29,175, from where it came? Let's go back to our question and we see from where we got this value. This is here. I showed you while I was explaining the question. Okay, factory operatives wages are the direct, and in the manufacturing account, in the first part till prime cost, we show only direct expenses. All other wages were indirect. One factory supervisor was indirect, and office staff is not, it's not included in the manufacturing account. So indirect wages, only one wage will be shown, that is factory operatives. Okay, the people who operate the machinery in the factory, the wages given to those people is called are called factory operatives wages, and this one is direct. Okay, so this is also done. Okay, direct wages are written here, and this will be added in this direct materials cost. Okay, these two costs will be added, and then what we will get? We will get prime cost. uh, the first part of manufacturing account is complete. Okay, the prime cost. Okay, prime cost mean all direct costs have been included, they have been counted, and we added them together, and what we get? Direct prime cost. Next heading is factory overheads. Factory overheads. Factory overheads are the indirect expenses, all indirect expenses that we cannot calculate for each product, that how much of this expense will be charged to each product. These are called factory overheads. So here wages of factory supervisor, 24,000 and plus 2,000. From where this 2000 came? This was given in additional information and this was accrued there. Means we have not paid 2000 of factory supervisors wages. Okay, 24,000 has been paid, that is shown in the data, and in the additional information they have shown that 2000 has not been paid, so they both will be added and we will get 26,000. Then factory power. This factory power was also accrued for $1315. Okay, this will also be, I have mentioned also that it will also be added in the given value of or the expense of factory power. Okay, and we have also added this 2000, and after that we have the depreciation in indirect parts. Yes, factory power is done, this much we paid, and this was accrued, this was accrued, so accrual added. Accrued mean that is not paid yet. And rent and rates and insurance, we are given, we have paid rent and rates 12,000, and we will only take 65% of this 12,000. How to take 65%? 12,000 multiply by 65 divided by 100, and we will get 7,800. Okay, this is the working for this, because they asked us in the additional information to apportion the rent and rates 65% to the manufacturing, 65% to the factory, and remaining 35% to the offices. So office expense is not written here. We are not going to write the remaining expense of rent and rates. Then depreciation of factory equipment. We are given the method of depreciation, that is reducing balance. What we do in reducing balance? We subtract uh, accumulated depreciation from the cost. 180,000 is cost, and we are subtracting provision for depreciation, mean total depreciation given in the question. Okay, it will be subtracted and the answers 20%. For the answer that we will get from this subtraction, that's 20% will be taken, and it is coming 23,040. Okay, till here we have calculated all the factory overheads and they all will be added. Okay, this is the block for all factory overheads. They will be added and they will be shifted, the answer will be shifted in the last column, final answer, because this answer is to be calculated with the or added with this prime cost. Okay, now till here everything is done. If you are getting or having understanding of the manufacturing account, please subscribe the channel and press the bell icon so that you can get all the coming videos. Okay, now then after these after doing these two things, direct cost and indirect cost, there is working for the work in progress balances. Okay, we add opening work in progress. See, we how we go we have written the sum of these two values will be added, prime cost plus factory overheads. What we are doing here, prime cost, we are adding prime cost and factory overheads, factory overheads. Okay, they are added 101,510 and plus 72,275 added, and 173,785 is their answer. Then into this figure, final figure, we add opening work in progress balance and subtract closing work in progress. Okay, this is subtract being subtracted. When it will be added, we will get 187,605, and then from this answer we will subtract closing work in progress. Okay, closing, this all data is given in the question, and then we will get the answer of the manufacturing account, the cost of production. Cost of production, this is our cost of production that we will take later into the income statements, cost of goods sold section. Okay, thank you so much. I hope you have got a better understanding today in manufacturing account. And now in the end I can also tell you that how the marks are divided. Once again, first I told you that 1 mark will be given for this value, then 1 mark for direct wages, 1 mark for adding these two items. Okay, and then one mark for writing each of the expense. Okay, you can see we have 1, 2, 3, 4 expenses, and there are 4 marks, 1, 2, 3 and 4 marks writing these expenses correctly. Okay, then we will add them. For the addition there is no mark, but adding prime cost into factory overheads has a mark. Okay, that if you will add these two, you will get 1 mark for that. And then for showing work in progress treatment in the end, you will get 2 more marks there. And then cost of showing cost of production and labeling it as cost of production. Okay, if you will label it as cost of production, and if your figure, you write the figure here, whatever answer you get, okay, you write that figure here, even your answer, this answer is wrong, even then you will get 1 mark, because they are asking this is own figure marks. Okay, because there can be any calculation mistake in the upper portion, so even with the wrong figure you will get the mark, but the figure must be there. Okay, they have to check that you did all the things, you considered all the values. Okay, thank you so much for watching the video. Please subscribe the channel and press the bell icon so that you can get all the coming values. Thank you.